Well, Australian shares are anticipated to open lower as the local reporting season accelerates, and this comes after an unexpected burst of hiring across the US in January despite a wave in Omicron cases. Joining us live now, Peter Switzer, founder of the Switzer Report. Pete, good morning to you. So, will this good jobs report in the US hit local stocks today?
It's a good question, Pete. You think good economic news like that, remember, the ADP private sector report comes out before the US official job numbers. They were down 301,000, but the official numbers came in up 467,000. So that's nearly like a 750,000 miss to the good side for the US economy. Now, that instantly made people think, hang on, if the US Fed's going to be increasing interest rates 4 or 5 times in a year, with this kind of spectacular economic growth, you have to expect more inflation, and maybe 7 increases is going to be likely. This is the kind of analysis that came out on Friday on Wall Street. However, the Nasdaq went up 2.4%. So go figure that. Now, our market is expected to open down as a consequence of the analysis I've just put out, that the strong number means higher inflation, means more interest rate rises. So this is a really interesting and I think potentially screwy report. There are question marks over the validity of these numbers. There's real question marks over the validity of these numbers. And I think that might partly explain why the US market didn't overreact. But at this point in time, our market is going to overreact. It's expected, down 41 points going, and the tech stocks in particular will cop it again.
I'm getting whiplash from so much of this yo-yo effect that appears to be taking place on our stock market at the moment. Best to ignore it, I say. Now, Pete, Facebook's record fell in value in a single day last week. Why is that?
Yeah, it's interesting. Facebook lost $230 billion in one day with a 26% slump in share price. That's the biggest ever. Before that, Apple was the biggest fall. And when you're as big as Facebook and Apple, when you have a bad day, it becomes a massive amount of dollars you can lose in terms of value. But, you know, we've all heard that Facebook is becoming less popular with young people. And there's a bit of a trend that young people are moving away from Facebook, and oldies are going to be the lovers of Facebook. But at the core of it is a report by Facebook that they lost $10 billion in 2021. This is not usual for Facebook to lose money. And the two reasons put forward were, A, new competition, and that's where I think the younger people may well be going. But an important one was that Apple has imposed new privacy changes that hurts advertisers' ability to target ads to potential customers and then to measure the effectiveness of the ads. So it's a very interesting development that Apple has been at the core of Facebook's massive fall in share price. Of course, they call it Meta nowadays because that's WhatsApp, Instagram, and Facebook all combined.
Yeah, the metaverse. Hey, just a quick one here, Pete. Company reporting this week. Who's up?
Yeah, the big ones I'm interested in is CBA. That's going to be a very important one. AMP, you wanted to see if that company is actually improving. Suncorp, which is a company I think is on the way up. But the big show and tell is next week. But the CBA one, what the outlook statement is, that's going to be critically important. Not what they've done up to December. It's what the outlook is for the rest of the year that's going to be critically important to the mentality of the market.
How do you feel about Neighbours coming to an end, Pete?
Very disappointed, mate. Wasn't that a great program? Haven't watched it for probably 25 years, but the first 5 years, I was very much a Neighbours fan.
Yeah, well, I don't think there's many Australians who are watching it still these days, so I guess it was a matter of time. But there you go. Peter Switzer, appreciate that. Thank you.
Cheers, mate.